Okay, cash flow statement. Now let's see what is cash flow statement. Unlike fund flow statement, cash flow statement shows the changes in the cash availability of the business. In fund flow statement, we saw what happened to the availability of fund to the business. Remember, fund and cash are different concepts in finance. Cash means liquid cash, the money that available with the business at any point of time. Whereas fund is the total available fund. Same time it is easily available, but it is not equal to liquid cash. Fund include anything that can be considered under working capital. To be more clear, fund in finance considers the availability of current assets over availability of current liability. I know I'm making it complicated, just leave it. Okay, just understand, cash flow statement shows the changes in cash and the reason for the change in cash. Okay, the business will have a certain amount. Let's say the business had rupees 10,000 with it in the beginning of an year. At the end of the year, the business had 20,000 rupees. There was a journey between these two amounts, isn't it? Many amounts would have been added, many expenses would have been meted. We must have gained some more money. Many changes have happened here to reach this final amount. So, cash flow statements show the detail of what all changes happened to the cash from the beginning, so that we have some other balance as the end balance. Okay, now remember, cash flow statement shows the liquidity of the business. That means how far we are liquid, what activities of the business consume the cash, the liquid cash available with the business. All these details are revealed with the help of a cash flow statement. Okay, now financial expert says that for cash to flow in and out of the business, there are just three ways. These three ways become the key components of cash flow statement. Don't worry, you won't easily understand this, I know very well. Please listen, at the end of this section we will see what is really a cash flow statement and what it looks like. So don't worry. And the theory says that there are just three ways for the cash to enter and exit business. The number one is through operating activities, that is cash flow from operating activity. Operating activity means the company's core business. For example, if we are telling about what, just consider a small tea shop. The main purpose of tea shop would be to sell tea. Yes, that's sure. But together with this tea, the shop will have so many other items. They will be earning from different things. But the main purpose, the core business is what? Selling tea itself. Beyond that, the owner of the tea stall will be earning so much of income. But we won't take that into consideration when we are talking about operating activity. So the operating activity means what is the main purpose of the business, what all money the business earned through the main business, what all money is spent for the main business, it is taken under the cash flow from operating activity. So we told before, we have three ways for the cash to enter and exit in a business. We have told the very first way. The second way is cash flow from investment activities. Cash flow from investment activity means the money the business has with them, they will invest in somewhere. They may sometimes acquire asset, they may sometimes dispose asset, whatever it may be, through investment. That means commitment of fund. What will happen? Cash will flow into the business and cash will flow out of the business. So think we are buying some land, so we are investing in land. So the cash has flown out of the business. Think we are selling some land, we are disinvesting, isn't it? Why selling? We are now making our investment lie dead there, so we are disinvesting. There also the cash has flown into the business. So in both places cash flow happened, and it was through what? Through investing activities. So the second way for the cash to flow in a business is investing activity, and the third way is for cash to flow in the business is through financing activities. Just two things we can look, that is taking loan and repaying loan. You know very well, when we take loan, cash will flow into the business. When we repay loan, cash will flow out of the business. Similarly, there are many other things like selling of shares, paying of dividends. Such things are related to financing activity, financing in the sense financing of the business. Okay, they are much related to the financing activity, and they are the third and the final way for the cash to flow into the business and out of the business. So what is cash flow statement? Cash flow statement distinguish between the activities that happen that cause changes in the business and classify them under three of these heads. And finally they will just give through which all way has the cash flown into the business and out of the business. We can get a better idea soon, don't worry. Be also aware about the uses of cash flow. They will give an assessment over the liquidity because cash is the most liquid asset. They will give an idea about what percentage of cash is generated from the core operation. They will give an idea how can we manage the cash flow of the business. We will have a picture on what is the volume of cash flow in and flow out through different activities. It will give an analysis over the investment because we know what is the amount of cash available with the business at any point of time. They will help in taking financial decision. They will detecting financial stock. Okay, that is there. We can just see the model of a cash flow statement. This is the basic model of a cash flow statement. First of all, we will see what? Cash flow from operating activities. Cash flow from operating activity will include net profit of the business, of course. Then we will just adjust non-cash items. I have told you before, cash flow statement will only consider items that can be stated in pure liquid cash. There are many non-cash income and expenses which are often taken in accounting for just adjustments, just like what? Depreciation. Depreciation would be something which is not, it is stated as an expense, but it is not something that causes cash outflow. There are many such things that are adjusted. Okay, then here we will consider the changes in working capital. Then we will get the net cash from operating activity. After that we will have cash flow from investing activity. See, here the purchase of fixed asset is stated as a negative cash negative activity. Why? The amount is given negative because the cash has flown out of the business. All other things has caused cash inflow of the business under the head cash flow from investing activity. Just read out the remaining. The proceed from sale of equipment. When we sell equipment, we will get money. The interest received, that means we will get money. Dividend received, yes, that means we will get the money. We will be receiving the money, isn't it? So they are cash inflows. It is only the cash outflow under investing activities. Finally, the financing activity. What is happening in financing activities? See, proceed of issuance of capital. We are issuing new shares. We are taking long-term loans. We are repaying. See, when we repay the loan, it is given as negative. Why? The cash is flowing out of the business when we make repayment. Now see what happens. What is the end result of the cash flow statement? Here we found what is the net change in cash flow when we added that to the cash at the beginning. What we got, we will receive the cash at the end as the answer. This means we have cross-check whether we have considered everything important. Now this is the most simple thing you need to know. Cash flow statement gives what change happened to the cash. See, in the beginning of the year, the cash was just, we can just imagine it's taken at lakhs or thousands. Okay, it was 16030 more. Yeah, 1,60,000. At the beginning of the year, the business had just 1,60,000 rupees. At the end of the year, it was 8,70,000 rupees. Now you are showing, being a financial manager, you are showing what caused this change, what all change happened to the cash available with the business, so that we have arrived at this balance. So here we have the reasons. See, very well stated financial reasons that cause the change. Okay, before moving on to a real cash flow statement, we can just see what are the major differences between fund flow statement and cash flow statement? It is like a conclusion for the theory, because since we have seen the two statements showing changes, we should know what are the major differences, isn't it? The very first thing is fund flow statement shows the movement of fund specifically, but what cash flow statement just show the movement of change in cash position. So fund flow statement being talking about fund, they just want to show you, they just want to let you know what happened to the net working capital of the business. But the purpose of cash flow statement is to show what are the causes of change in cash position. Now what's the third thing? That scope, it deals with all the components of working capital. See, fund flow statement deals with everything including cash, okay, but cash flow statement ignores all other components, but it takes into consideration only cash. What happened to cash? That's the one and only main focus of cash flow statement. Fund flow statement shows a long-term result, whereas cash flow statement shows the current liquidity of the business. Very important point. It shows the liquidity. It shows what? Solvency of the business. Okay. Yeah, that is given as the next point. It measures solvency, whereas it measures liquidity. Fund flow statement measures the solvency, the long-term ability of the business to meet obligations, whereas liquidity shows the short-term ability, the ability of the business to meet nearer and sooner obligations. Fund flow statement don't have a prescribed format. That's why I have told you, if you write application and fund in the opposite order also, it is correct. No one can challenge you. But when you are drawing a cash flow statement, remember the accounting standards of India has prescribed a format. You cannot break that format. You can't do cash flow statement in your own way. It is legally mandatory statement. Okay. The components, the key components of cash flow statement is, fund flow statement is sources of fund and uses of fund, whereas the cash flow statement is divided into three parts: fund from operating activity, fund from investing activity, fund from financing activity. And when we talk about non-cash transactions, yes, it is considered in fund flow statement. It is absolutely avoided, ignored in the cash flow statement. So we can close this discussion with one cash flow statement, that is from Infosys. Infosys, together with their annual financial statement of 2023, have given a cash flow statement. Okay, here is the cash flow statement. See what they are telling. Remember, whatever we have seen earlier is followed by the even big corporate like this. Why? In India, we have a standard format for preparing cash flow statement, and if we want your company to comply with the Indian rules, you have to prepare your statements in that format alone. So here is the format, and here is what they have done. See, it is given in crores. The profit for the year 2023 was 23,000 crores, and 2022 it was just 21,000 crores. Then what happened? They are just adjusting non-cash items. See, and finally they have reached the net cash generated from operating activity. So they have completed that part. Then they have moved to cash from investing activities. See what all things they have done under cash from investing activities. They have expenditure on property, plant and equipment. They have brought property, land and equipment. They have deposited with corporations. Then they have done many things. See, whenever they have made an expense, when they have lost money, when there happened a cash outflow, they are put it in a negative, which means they have lost money. Similarly, there are many other investing activities happened in the business. They have listed everything, and finally what happened, what change happened? They have taken it as the net cash used and generated from investing activity. Finally, moving to the third and final section of the cash flow statement, they show what happened to the cash flow through financing activity. See, they have payment of lease. Lease is a financing option. So the payment for lease is negative cash flow. That means it is cash outflow of the business. Then shares issued. Similar. They are given what all financing activity they have done and what was the cash change, whether it was a cash inflow or cash outflow for the business. Finally, they have arrived the end cash balance through adjusting this change to the cash balance at the beginning. So this is the purpose of cash flow statement. Now we have seen a real life cash flow statement, and I think the idea is more clear for you. Still, if you have any doubt, please let me know. I will make it more clear. I'm not going for practical problems because, as you have seen, it is complicated. Just knowing the theory is enough for you. So thank you.